Hello, how do I find stocks that pay dividend? We are going to use Charles Schwab to find those stocks, and you log into your Charles Schwab account if you have Charles Schwab account, and you will enter your login information. If you do not have Charles Schwab account, you want to create one, then you'll open an account with them. You'll click on open an account. But once you have an account with them, to log in, you will enter your login information and you will click on login. So when you log into your account, by default, you will be under account and a summary. So you will click on research and you click on US market. And when you do that, you look at return to classic view. If you have that option, you will be able to look for dividend stocks in the modern view as well, by just scrolling down to see the sectors and the industries. And when you see the sector and in the industries, you will click on show more and you'll be able to go from there. You'll find the sectors and you'll click on the one you want to see the industry that inside of it and the sub-industries in an industry there and the companies in that sub-industry. I like to use the classic view. Therefore, I'm going to go back to research and click on US markets to come back up, and then I'll click on return to classic view. So under classic view, you'll scroll down and you'll click on industries. That will show you the sectors under that and the different sectors on that you can buy stocks from. So we are going to choose one of them. We are working on consumer discretionary. We are going to continue with that one. And today we are going to look for Automotive. So how do I find dividend stocks in the consumer discretionary sector, in the specialty retail industry, and in the automotive retail sub-industry. The previous video, we searched for dividend stocks in the apparel retail. Today we are going to look for stocks in the automotive retail sub-industry. And we will see the companies in them. By default, you will be under performance, and that will have some performance criteria, but we are going to click on valuation, and within valuation it does have fundamentals as well, and then it has technicals as well, but we are going to work with valuations. And within valuation, you click on dividend yield to soar from highest dividend to the lowest one. And when I click on it, it sorted, and from here you can look for the highest dividend paid that you are interested in. By this point, you should have some criteria set, and the first one should be the lowest dividend that you are you are willing to accept in your income generating portfolio. And we said 3%. Therefore, we will focus on stocks up to 3% annual dividend yield. But I'm going to scroll down so that you see all the stocks within this sub industry, automotive retail. And you can take a screenshot. It does not mean that the one that didn't make our card are bad ones. It just didn't meet the goal, the criteria that we set to reach the goal that we set those criteria for. And as you can see, it has 2 pages, and we are already among the one that do not pay dividends. So we are going to click on page 2 to see the ones on page 2, and we'll go back to page 1. And we will select the stocks that we will focus on, and that would be the top 3. So at this point, you should have your investment spreadsheet open, and you can design your investment spreadsheet to have, like, you have one tab that you label stocks. And so how do you design your investment stock, your spreadsheet? So you will have one tab and that you can just label stocks, and that's where you enter manually all the good stocks that you are interested in investing in. So you just you label multiple columns in the spreadsheet. The first column you can keep it for your notes, so that if you come across a stock that you really like, you can have a note for that stock. And then you will label a column as date, and you label another column as stock let's just call it stock list. So one column you can name it notes. The next column you can leave it for dates. The following one could be your stock symbol or the name of the company. So you can just say company name. The following column will be symbol. That will be the stock symbol. The next column will be the market that stock is sold on. And you can even make some note for yourself, like avoid only NASDAQ. If I'm saying it right, yeah, and New York Stock Exchange, for the market. And for the company, you can have a note as only name ending with corp for corporation, CO, that's the same thing, corporation, INC, and sometimes the company won't have anything at the end, like Johnson and Johnson. They don't even have anything at the end. So those are the only things you want to accept. And in fact, we can make this colon if we go to if we go to home, format cells, alignment, we can just wrap that one so that if we have too much information in it, it can go to the next row within that cell. So we have the markets, that is the stock is sold on. You'll have price, the last price it is selling, and what else can you will need. So at this point you can have 52 weeks low, 52 weeks high, and then you can have dividend month, dividend, let's call it quarter month. And it seems to me that this, we are going to format that as well. And annual dividend yield, you want that. And the next thing you'll want is the chart. So you want, let's just call it year, year, it went public, or start year. Let's just say year it went public. And we are talking about the stocks here, and that is the year you'll find at the bottom of the chart, at the maximum chart trend. And you can have descriptive name for the chart. So growth, upward, I like to say upward trend, growth and deep trend, and those are the two things that you want to accept. So anything you want to avoid downward trend, so we can just put those two there. And you want to have the sector that company is in. You want to have the industry. You want to have the sub-industry. Is for your own record. That way, when you want to know if you are diversified, you can look at the stocks you invest in to see what industries you have in your portfolio and what sectors those industries are in. And pretty much that's that. And when there is other information you're interested in, you can just insert columns and enter those information in it. And from this point, you just complete as you do your search. And then you can set some criteria to work with. But the first criteria that we have, you can even try to add it on your spreadsheet to stay focused, is where we have the dividend yield. You can say 3% and up, for instance. And that's what you want to focus on. So now that we have the draft of, and that is pretty much how you create your investment spreadsheet to record the list of dividend stocks that you want to analyze to see the ones that are good for you to invest in long term to generate income through dividend. And there will be multiple other tabs that we'll add later. Okay. And there is something I'd like to point out as well is, we can talk about it when we get there, but the dividend quarter month just mean which quarter, which is it, like the first month or the second month or the third month of the quarter that they pay dividend. And that's what you want to put down. And it might be helpful later as well when you are trying to see how which month you make the least amount of dividend income. And because you want to invest, to see if you will need to invest more in those stocks that pay dividend during that month of a quarter, then that will come into play, knowing that, oh, those are the companies that pay dividend within this quarter. Like if you have 3 stocks to choose from and they all pay dividend within different time frame, and everything else is equal for them when you analyze them, then you can use that as a factor as well, knowing that month 1 of the quarter you earn the least amount of dividend. You can base your decision on that to invest in that stock instead, if that makes sense. So now that we have a draft of stocks list, let's go analyze those stocks. So we found 3 in the automotive, retail, and you want to enter them on your spreadsheet. So what you will do is, and that's something I manually do, and we can just have an example here. We found 3 that made the car, and there is some information you can find on this first page. So you'll find the company's name, and within the 3 that we found, the first one, we'll start with the first one. So you look at the ending name of the company is Corp. Therefore, it passed that second criteria. The first one was the 3% dividend. It passed it. And the second one is the name entity is a corporation. Therefore, you will write that company's name down, and you will enter the dates. And from here we can see the symbol as well, and you put the symbol VFF, and we don't know the market is selling on just yet, but we have the price. So the price is $1.90. We don't know the 52 weeks low or the 52 weeks high, but we have the dividend yield. So you will put the dividend yield, which is 9.43%. You'll enter 9.43, and in fact, if you want, you can just click on that column and turn it into percentage. So, and then we will enter it again, 9.43. That automatically will turn it into percent for us, and it's trying to round it. We don't want that, so we will, in fact, we'll do it for the whole cell. Okay, we want 2 decimal, 2 digits after the decimal point, and from here we will enter the sector that it is in, and you will go to the top and you can find it there, or you can go a little bit up as well. And you can scroll to your sector, and the sector is consumer discretionary. The industry is specialty retail, and the sub-industry, because the sub-industry is not highlighted, I can just copy it instead of tapping it. And I will click twice in it so that I can paste it without the formatting from where I copy it from. And that's how you enter those information. So since we have 2 more to add in it, we can just add them, and then we'll copy those 3 that are identical for them and just drag them down for those 3. So I'm not going to do that for all of them. I'm not going to enter them on the spreadsheet, but you'll do the same for the second one as well. It has INC at the end, therefore it passed our entity criteria. It has the symbol, you can see the symbol. It has the price, $21.39, and then it has the dividend yield, 9.35%. And the third one is Moro, INC. It passed our criteria as well. And the symbol is MNRO. The price is $29. When it does that, you can just close it. $29.02. And the dividend is 3.86%. And then we will be done with this sub-industry. So the reason why I said to go with Corp INC, I like to see if there is one here that you should avoid, but one that is saying holding is not in the corporation entity names that we put down, therefore you will not do anything with it. This one say holding but have INC at the end, you will add it to it if it was paying a higher dividend. So since it's not paying dividend, we are not even going to worry about it. I'm just trying to see if there are some. Do you see CO? That's a corporation. If you're paying high dividend, we will have it included. And this is an example of companies that you do not want to include on your spreadsheet. LTD, that stands for limited liability companies. You do not want that. L.L.C, you do not want that. Partnership, you do not want that. SA, that's foreign, you do not want that either. So you want INC, you want corps, you want corporations, or CO, type of ending in the company's name after it's paying high dividend before you put it on your spreadsheet. So now that we have those 3 on our spreadsheet, we need to go analyze them one by one. We will put them through other criteria. So let's go to our spreadsheet to make sure we are I'm not skipping a few things that I wanted to address. So you need to set your criteria, and this criteria works well when you are ready to work from your spreadsheet to when you are ready to invest, to see what stocks you want to invest in, because you'll have a long list of stocks on your spreadsheet, to see which one you want to invest in. And as you can see, the list is long. Those criteria or parameters will be helpful to know which one you want to invest in first, which one you want to invest in second, and so forth. But the criteria you are going to work on, you are going to use to even select the companies, the stocks, to put on your spreadsheet to narrow them down to good ones, are the following. So you want to find good dividend stock to invest in by doing the following. So you sort them by dividend, which we did. You eliminate the LLC and partnership companies. Thankfully, we didn't have any of those among the three that we found that pay the high dividend. And we didn't have any international companies among them. And a lot of time, international companies will have SA at the end of the company's name. So, and I like to batch research, like the way we did that sub-industry. If you want, you can. If you want, you could easily go back to retail, a specialty retail. We work on automotive retail. You'll click on the next one and you'll find the companies that are there, and then you'll come back and work on the next one, and so forth. But we are going to work on one sub-industry at a time in our videos, but you can batch work as well so that you can work faster. And it takes time because you are manually doing those recording. So avoid OTC market is something, when we are analyzing those stocks, that's something we are going to pay attention to, and we do not want new companies. And we will analyze the chart as well. So, and to avoid new companies, you need to set the year that you don't want to go past. And in the criteria, the parameters that we set roughly 1990. I didn't have 1990 here, but we said 2000. We can just work with 2000. We do not want to put on our spreadsheets any stocks that went public after 2000 for dividend income purposes. And that's what that means. So you can even put on your spreadsheet when we put the year it went public, we can say before, and you set yours. Mine is 2000. Anything after 2000 to me is too young, has not been around publicly for long enough for me to trust the chart trend. Okay, so, and that's, so you have to set yours to be able to eliminate what you consider as new companies out of your list. So let's get started. So I think we have, the first one is AAP. So what you will do is, I don't like to search those stocks individually in the classic view. So you'll go back up, you click on research, and you click on stocks. And under stock research, you now type every single one of those symbols that you enter on your spreadsheet. And the first one is that one, so we will enter it, and it should give you the company's name, and you click on it. So when it show you the company's information, you want to pay attention to the market it is selling on. You want to pay attention to the price. You want to pay attention to the 52 weeks low and the 52 weeks high. And the first criteria for elimination in 1, 2, 3, 4 things that I just said is the market it is selling on. If the market is not NASDAQ, is not New York Stock Exchange, then you do not continue entering information related to that stocks on your spreadsheet. So this one is OTC market, over the counter. Therefore, it failed the rules. You can either delete it, which I would prefer to do, or you can enter OTC, and then you don't do anything else on that line, on that row for that company. So companies that you notice that you didn't finish the study on means you are not going to consider them. But to clean up your spreadsheet, you can just delete them off of it, especially if it is OTC market. That is a criteria that you are not going to accept. So now let's go back to it. Which one is the next one? Is CWH. So CWH, Camping World Holding. We want to make sure that is the name, Camping World Holding Inc. So Camping World Holding Inc. is on NYSE. So you'll enter that on your spreadsheet. And since we have that one, let me undo what I did on this so that I can keep some information of it. And let me see if I still have the symbol of this one. No, that's the old one. CWH, and the name is Camping World Holding Inc. And here it has A at the end of it. And the market is NYSE. The price is $21.39. The 52 weeks range, the lowest price is the 52 weeks low, and the highest price is the 52 weeks high. So you want to enter that on your spreadsheet. So that'll be 16.18 for the low and 32.8825. So that means at some point within the 52 weeks, it sold for $16.18 and it sold for $32.88. So that helps to know if that's the right time to buy. If other criteria later it passed them. So at this point, we will continue. And you will scroll down to dividend. And for dividend, you want to see when it pays dividend, and it is September. So let's see September. Which month of the quarter is that? Okay, let's see if I have. So September is month 3. Is it month 3? September, October, October, November, December is another quarter. October, November, December is quarter 4. So yeah, July, August, September. September is month 3 of a quarter. So now you will go back to your stocks list, and you will just put month 3, and then the dividend yield is 9.35. You will enter that on your spreadsheet, but you should have done it by now from the way we were before. Now that you have the information related to the dividend, and keep in mind that the dividend rate changes for those stocks depend on how their price is, depend on the movement, their price movement. Okay, so now you scroll back up to chart. A lot of time on the first page you'll have 1 year chart. It is useful when you are ready to buy some share of the stocks, but we want to find the maximum chart. For that reason, you will click on show more, and you want to make sure your chart is set at maximum, and if it's not, you need to scroll and click on maximum for it. So make sure the chart is set at maximum, and then you scroll down and look at the chart. You want to copy the year it went public, and if you put your mouse at the end of the chart, at the start of the chart, you will see the year is 2016, or you can just go with the first date mentioned at the bottom of the chart. So we are going to put 2016, and you can see right there that we want companies that went public before 2000, and this one is 2016. Therefore, it didn't pass that criteria. It is a new company. It's not going to be, we are not going to invest in. So that's how you will do the search. So this one didn't pass it. Even at this point, if you want, you can take it off of your spreadsheet. And so I do leave them on it when they pass other criteria up to this point, and I just know that it's too young, I'm not going to invest in it. And then because it failed that criteria, we'll just move to the third one. So we can just scroll up, and again here I like to batch work as well. When you want to go back to the page before, you can just click on those arrows, and it will take you back to the first page of the company. So to batch work, you can just search the companies and work on this page, and later when you click on show more, you'll work on the chart for all the ones that you didn't study the chart. I don't know if it makes sense. That way you won't switch pages from one stock to the other, but for all of them you find the information on the first page for them, and then later you look for on their chart as well. So now the last one on the list is MNRO. MNRO. So MNRO is NASDAQ. So let's start over again with this one. So we are going to pretty much delete this company off of our spreadsheets, and MNRO INC. And the way we studied the companies before, like when we went to the classic view, you'll have all three listed on your spreadsheet. And as you you are passing them through filters, and if in one filter, you just stop your research on that stocks and move to the next stock. So you don't necessarily have to delete it from your spreadsheet. You just stop researching that stocks and move to the next stocks. And if you want, you can delete them from your spreadsheet the way we are deleting it. The symbol is MNRO. The market is NASDAQ. And the price is 29.02. And the 52 weeks low is 22.72. The 52 weeks high is 57.70. And those information are on it. So you look at the market, it passed your market criteria. It has the price is selling, it has the 52 weeks low and the 52 weeks high. Keep in mind that the price changes, and those 52 weeks low and high changes as well. You just want them on your spreadsheet for record purposes. And then you scroll down to dividend, and under dividend, this one pay in September too. When you have two dates, I like to go with the latest dates. So that'll be month 3, and the dividend is 3.86%. Now we are going to analyze the chart. So you will scroll back up and click on the chart to see the maximum chart. And you want to make sure the chart is set at maximum, and then you look at the chart. So you want to look at the year it went public is 1991. You put that on your spreadsheet. It passed your 2000 criteria, so 1991. So now you analyze the chart. You have upward trend, growth and dip, and then you have downward trend and level. So you can label those and then see how you will describe this chart. But before we do that, let's go take a look at some chart to have an idea what upward trend chart looks like, what a growth and dip chart looks like as well. So we have some criteria here, but you can work with yours as well. And pretty much what that means is public company before 2000, that went public before 2000, pay annual dividend. The minimum is 2%. So you filter, like you have things on your spreadsheet. And again, it's when you are ready to invest. So you want to find those upward trend companies on your spreadsheet that pay 6%, invest in them first, and then find the one that pay 5%, invest in them second, and then find the one that pay 4%, invest in them, find the one that pay 2%, invest in them, and so forth upward. So now this is an example of an upward, and this is an example of upward trend. This is an example of growth and dip. And for growth and dip, you want companies that went public. That means they are selling stocks on the stock market exchange, NASDAQ or NYSE, and went public before 2000, and they pay 6% and up in annual dividend, or 5% or 4 minimum. So you don't want to invest in any one of them that pay less than that, for instance. So on your spreadsheet, once you have a long list of them, you want to invest in the one that pay you more than 6%, up to 6%, and then invest in the one that pay you 5%, and then the one that pay you 4%, type of thing. So, and that is an example of growth and dip. By growth and dip, you will see those growth and and the dip, there will be la pronounced, growth and dip. For the upward, the zigzag are kind of small. The zigzag are kind of small, and yes, we do have a dip here that is quite pronounced, but it didn't happen for a long period of time, so it's like a line there, and we do have a growth here as well. That is not the norm, but you can see that it is, the zigzag are kind of small, and the price it was selling when it went public and the price is selling now. If you try to join those 2 points with a line, the line will be upward, oblique shape like. Therefore, it is upward trend. And this growth and dip should have growth in it, meaning the price it was selling when it went public and the price is selling now. When you're trying to join them, the line should be oblique as well. And we can try to do that when we trying to join that, and let's make it a little bit bold and change the color. Why not? So you can see that it is kind of oblique. There is growth to it as well, but it has, those big growth and dip that are kind of pronounced. And this one, the dip is not too deep either. Those dip are higher than the previous dip, so you can see growth in it. And if we try to do the same for this by joining the beginning of the line and the end, prices, you can change the color and make it a little bit, you can see the growth in it. And because the growth and dip within those 2 points are so not pronounced and look like small zigzags, I like to call this type of chart upward trend. But both should have upward look to them for that to make it to your spreadsheet. So both are upward, have growth, but this one has, out of line growth, out of line dip. So now let's look for few more of those, and this will be upward. So we have this one, and that's Clorox, and this one is Cats. And Cats, you might say growth and dip, and I'll say that will be fine too, but I will call this an upward because you can see that the zigzag are kind of small, and we do have those deep, but the deep, they are higher than the previous dip, which is showing growth, and they are not too deep either, because what you are trying to avoid is you do not want a dip that is as close to the price that it went public decades prior. You are trying to invest long term. Therefore, at any point you want to sell those stocks, you want to sell it for profit, even though they have been paying you dividend over the years. You want that to, when you sell it, you want to make a profit on that sale as well. Therefore, like throughout the years you are going to make dividend income in them, but then your money invested in that stock it will continue to grow when the stock price continue to increase. So when you sell it, you'll make profit. So you'll make two types of income on the stocks, one through dividend income from day one, and the second one when you sell the stocks, there will be a capital gain. So I will classify this as an upward trend because you can see, if you're trying to connect both, is quite oblique. The next one is Colgate, and Colgate is upward trend as well. You can see the zigzag. The zigzag are small. It's not really too deep or too up, so it is upward trend. And you can see those deep that are quite pronounced here. They are higher than the previous one. So the upward trend, we can classify this as an upward trend as well. So the next one is a Johnson & Johnson, and it is an upward trend. You can see the zigzag. The zigzag are small, like the teeth of the zigzag are kind of small. And this one is Inbridge. I classify Inbridge as upward trend, but some might classify it as growth and dip, and I think that will be justified as well because of those changes the past few years. But yeah, and another upward trend is General Mills. And General Mills, you can see the teeth are kind of small for the zigzag, and you do have some pronounced one, but not really. And then it went back up. So let's see. And this one is Coca-Cola. So I put upward trend for it, but you can see that those growth and dip are quite pronounced, but not too much compared to, for instance, General Mills. You can see that Coca-Cola has those growth and dip, but again, from the beginning to the end, that is an upward trend in my opinion. And this one is Home Depot. Again, the zigzag teeth are kind of small. And now let's see some example of growth and dip chart. This one is Verizon. So you can see the growth. We still have growth to it. And when you are analyzing the chart, you want to look at the price that it was selling when it went public, and the price is selling now, and you want to see that oblique shape if you were to draw an arrow to reach those 2 points. And it is oblique. The price it went public is lower than the price is selling now. And at no point in history that it went down to reach this star price. Therefore, it has growth to it, but it does have those big growth and those big dip. Perhaps the growth are higher, the dip are lower, but because of those big jump, it makes the dip quite pronounced as well, or noticeable. So, and then there is gap between the growth and the dip. So, and I think the gap between the growth and the dip, and is what makes it pronounced as well. That means the time that it has been down, was extended, and the time it was high was extended as well. It could have crossed 1 or 2 years time frame or multiple months for that to be that pronounced. But when it is just a short period of time, it will look more like a small teeth type of zigzag. So we do have those small teeth zigzag, and we do have those extended growth time period and extended deep time period as well. But a Verizon is a growth and dip chart trend. So yeah, sorry. Another stocks that has a growth and dip chart is Pfizer. And you can see it has growth to it, and it has those extended growth time, extended dip time, and between it does have those small zigzag teeth that are short term frame growth, short term frame dip, but then has those extended time frame growth, extended time frame growth, and then extended time frame dip. So I will put it under growth and dip because the growth and dip are quite pronounced. Another growth and dip chart is Ford. And if anything, Ford is a chart you do not want to consider. If we draw an arrow from the price, in fact, two arrows, one from the price it was selling to touch the lowest dip that we have on it, and then we draw another arrow. Don't know if you allow me to draw another one again. Let's click on it. We draw another arrow from that start point to how much it's selling. It does have growth to it, but it is a stock that have big growth and big dip, and those dip is what you want to pay attention to. You do not want the dip to be as low as the price that it was selling originally. So that means if it's doing that, you could purchase it, and sometimes in the future it could go down as low as how much you pay for it, or even lower, and it may not be the right time for you to sell it if you want to sell stocks, some stocks. So but it does have some growth to it. But when things are bad, because when you have those big dip, you want to see the yield, you have those big dip, and one is 2008 for Ford, the second one is 2020. Therefore, during those major crisis time frame, that stocks really plunged down. So that's something to consider if you choose to invest in it. It better be paying you high dividends, well above 6%, for you to consider those risks. Otherwise, you just even invest in them long term. But again, it has some growth to it. It has big growth, it has big dip. It's growth and dip, but I do not like the dip in on this chart. The dip should not be as low as the original price they were selling when they went public. So now that we have an idea on those charts, let's go back to our chart here and analyze it. So by looking at those charts, when we look at this, we will say it is growth and dip. The price it was selling in 1991, which when you put your mouse on it at the right, you will see the price. The years are at the bottom of the chart in the axis, and you have the price on the wide. So now when you put your mouse on at the start of the chart, you will see the price is 378, and now where the blue price is 29.02. So at the beginning was selling at $3, now at 29. So there is a growth to it. However, between those two time frames, you have those big growth and those big dip, but the dip are not as low like to $3. Does that make sense? And right now it's quite down, but still it didn't reach $3 and it start going back up again when you are looking at the end of the chart is it went down and start going up. So that is how you'll analyze the chart, and by looking at this you will say it's growth and dip. So you'll go back to your spreadsheet and you'll enter growth and dip. So now it's growth and dip, but look at the dividend yield is paying 3.86. For the risk that you are running to invest in a growth and dip chart type of company stocks, you want them to pay you high dividend. And we set some parameter on even on our spreadsheet. And we showed the parameter before that for growth and dip chart, it had to be paying above 6%. And we do have some leeway. Let's see here. I mean, we said the minimum should be 4%. So that's how you set your own rules, what you are willing to accept. And it depends on the goal you are trying to reach as well when you are trying to invest in those dividend income stocks. So now for 3.86% that they are paying, and for how the chart has growth and dip, the good news is that the dip is not pronounced, though the growth is pronounced but the dip is not. So if you are willing to accept 3.86% dividend, that's fine, but frankly I think it's too low for a growth and dip type chart. So that's how you enter things on your spreadsheet, and you just continue. So let's say that this company is a good one to invest in, or you are okay with 3.86% and you have some money to invest. Then you look at it to see is it the right time to buy that some share of that stock. That's when the 52 weeks low and high will come into play. So you will compare the price that is selling now or is sold last when the stock market was open to the 52 weeks low and the 52 weeks high range, and you will see where it is situated. And 29 is close to 22, that it is close to 55. Therefore, if you want to buy it, you can buy some share. It does not mean it won't go down. It can go lower than $29. So when you are setting the price to buy it, you will pay attention to how much is selling if the stock market is open by the time you are placing the order. And you can place the order by paying attention to the ask price, the bid price, the price is selling, to set your price a little bit lower if you are not in any hurry to buy it right away, because it's not like at the very low 52 weeks low price. So you can set your price lower than what people are buying it at the moment you are placing the order, and just select good until cancel. So if the stock price went down, that's what will buy for you. So, and when you are purchasing, when you are ready to make a purchase, the short-term 1 year chart can be useful to look at it, to see the shape of the line. It tells you if the line is going up, you know that it's going up, and if it was looking down, you know that is on its way down. Does that make sense? So it can continue to go down, therefore you set a lower price, or you can keep an eye on it. But at this point you can see that it reached a low not too long ago, the lowest point not too long ago, and then start going up. So it could go down a little bit again. So if you want to buy, you'll place the order, but not at the price is selling. If you're not in any hurry to buy that share, you can just put a lower price and select good until cancel, which is 60 days or 90 days that price will be valid. If at any point you reach the price you set, ChartSwap will buy for you. So we are not going to talk too much about how to buy stocks in this video, but that is pretty much, the process to find dividend stocks to invest in. So now, the reason why you want to select the rate that works for you, the dividend rate that works for you, is because of the type of goals you are trying to reach. So how do I make $1,000 a month in dividend? Well, if you want to reach that goal of making $1,000 a month in dividend income, you'll take that $1,000 and you'll time it by 12. When you time it by 12, it'll give you $12,000 for the whole year. So you choose the dividend yield that you are willing to accept from those stocks you want to invest in. And here we just pick 6%. And you saw that during our research, we found stocks that were paying 9%, and then 3%. So you will want to choose the rate that will be average in your portfolio, and then you take that $12,000 divided by that rate. So in this example, we use 6%. So you take that annual income you want to make in dividend divided by that 6%, and with 12,000 divided by 6%, it equals $200,000. So you need to invest $200,000 in dividend that pay you 6% annual dividend yield for you to earn $1,000 in dividend income a month. So, how do you make $1,000 in dividend income a year? You can even start with that. And again, we'll use 6% rate. So you take that dividend income for the year and you divide it by 6%, and that will give you 16,667 that you should have in your account invested in those 6% dividend income stocks for you to make $1,000 a year. And when you do that, when you take that $16,000 that you need to have invested, maybe you don't have $16,000 right away to invest, then you take that $16,000 and you divide it by 12 for 12 months, and that will give you $1,388 to invest a month. So if you are able to invest $1,388 every month in a stock that pay you dividend, that pay 6% in dividend, and that stock has a good chart and is close to 52 weeks low at the time you are investing in it, every month you look for those stocks on your spreadsheets that are on the low side of the 52 weeks low, close to 52 weeks low, to invest in, and you do that every month. you will reach that goal of having $1,000 in dividend income a year once you reach $16,000 invested in those dividend stocks. If you keep at it, keep doing it for 10 years to 12 years, even by 10 years, by year 10, you could easily be generating $1,000 in dividend income a year, because you keep investing $1,300 or let's just say $1,400 a month in a dividend stocks that pay 6%, and you make $1,000 a year in dividend income, and you have been doing it for 10 years or so. That $1,000 you have been making a year, that'll be 10 times that you will be making, which to 12 times that, so that'll be about $1,000 dividend income a month. And because those dividends, you are not taking them out of the account, you are reinvesting them, they'll keep growing, they'll keep generating, they'll keep buying more share, and they'll keep generating dividend. That's why by year 10, if not before, you will reach that goal of making $1,000 a month in dividend income by just investing about $1,400 a month. So pretty much within 10 years, you will be making about the same in dividend income as you are investing a month in a stock that pay you 6%. Does that make sense? Because if you are investing $1,300 to $1,400 a month for 10 years, and you are making about $1,000 in dividend income a month, you are pretty much close to make about the same as you are investing a month. I don't know if that makes sense. So yeah. So you set a monthly amount to invest based on your living expense. If you want to generate dividend income to cover your living expenses, you can use your living expenses as the starting point. Like, how much should I invest to make my living expenses as an income through dividend? And here we use $12,000 a year and back into it just like the way we did it before, to find that you'll need to have $400,000 invested to make $24,000 a year in dividend income, or $200,000 invested at 6% to generate $12,000 a year in dividend income. So you just take how much you want to make a year in dividend income divided by the rate you want the stock to be paying you, to find how much total you should invest to be making that money. And then you just set a time frame, and you want to break down the goal so that it is doable. You don't find it like it's too much. So you can set 10 years time frame by dividing that amount that you need to have invested, to see how much you need to invest a year, and you divide it by 12 to see how much you need to invest a month. And then see if you can take a look at your budget, your paycheck, your budget, to see if you'll be able to invest about that amount to reach the goal you are setting to reach in 10 years. So to do that will require you to be frugal, to pay off your debts. I will not say that you have to pay off your debt before you invest. It is a good way to do it, but it may not be for everyone. If you are 50 years old, or maybe even if you are 40, I would say if you are 50 years old and more, if you have debt, you have a lot of debts, maybe you might want to try to pay a little bit extra toward those debts at the same time that you are putting a little bit in the stock market as well. The reason is you need time for your investment in the stock market to grow for you. Therefore, it is you might just have to do both at the same time. But when you do not have debt, automatically the amount you need to live on every month is low. Therefore, the goal you want to reach, trying to make income through dividend to cover your living expenses, is easier to reach, because without that, your living expenses, if you are frugal, won't be a high number to work with. So that is an example of living expenses without debt. And then you have, irregular expenses. Those are expenses that you need to save for, because you do not pay for them every month, but you pay for them some part of the year. Therefore, you need to save for them as well. So you can pick one to reach that goal, or you can total both to see how much you need to have invested to generate enough a year in dividend income to cover your total expenses. And another way you can do that as well is, you can say, okay, you can look at your paycheck and try to divide it in 3 and see if your living expenses, your basic living expenses, fit within 1/3 of your paycheck, your household paycheck. And then if your irregular expenses can fit within another 1/3 of your paycheck, and then the last 1/3 of the paycheck, you can use that to pay off your debt if you want to pay off the debt before you start investing. Or if you are done paying off debt, then the other 1/3, you can invest that in the stock market. That's one way to do it as well. And another way to do it is, well, in this example, you can say, okay, I'm going to keep 1,000 in the checking account for my living expenses, put 1,000 in the saving account for irregular expenses, and then invest $1,000. So that means for every $1,000 you live on, you want to make sure you put out another $1,000 in the stock market working for you. Okay, so set a monthly amount to invest based on a specific expense. You can do that as well. But the thing is, you have to set a routine that you want to work on every month. Some people like automatic withdrawal from their account. I do not. I like to be in control of my things. Therefore, I don't like to put anything on automatic, anything. So if you like things to be just automatic, you can go with it. I do not like that, because when things are automatically done for you, chances are you are not going to check them. So, but if it works for you, that's fine. But for me, if I want to reach the goal, I want to work on it. So but then we are all different. I like routine. I like to set the goal and then working, see how I can get a routine out of it, so that it just become a habit, a second nature things for me. Therefore, that's why I'm trying to break it down to monthly to see what I should invest every month. And again, I get paid every month. I'm salaried. I get paid at the end of the month. That's why I do everything by the month. But if you get paid every 2 weeks, you can go with weeks as well. But like my husband gets paid every 2 weeks, and we pretty much save his income for a month to the end of the month, so that we can be on that monthly rotation. I don't know if it makes sense, but yeah. So even though our household, we have a monthly salary and bi-weekly wage. Monthly wage, we convert both to monthly budget. So we keep my husband income when it comes in for the month, and then we use that the next month. Does that make sense? So when we sit down, we work on our budget, we combine both income, and then we allocate it for expenses for the next month. But if your household is on a bi-weekly income, then you can work on the bi-weekly schedule. So, but yeah, and you can just pick one expense, just try to break it down until while you are learning to find what works for you, what kind of stocks you like to invest in for dividend income purposes. You can just pick small expenses to work with. It could be travel, if travel is a thing in your family. It could just be maybe cell phone. So in this, we have an example here. So we pick $50 a month on a cell phone, which is now what we pay for cell phone, but it used to, but not anymore. We use Telo, and it costs about $8 a month, my husband and I. But we used to have Verizon, and it costs us around $150 a month. So you can see the big change between it. But my husband has had Verizon for many years. So from over $100 to $16, that's a big saving right there. So that's how, if you feel like your expenses can be lowered, you can look at each category. It's important to have a budget. The budget does not dictate how you spend, but how you spend help you improve your budget, if that makes sense. So they are related. So you set your budget, and then you enter your actual expenses every month, and then you compare it to see if you set realistic budget. So we can talk about that later. I don't know. But yeah, so, and you can look at the budget categories. And by the way, we have a budget template at ninasoap.com under free download, that if you are looking for a budget spreadsheet, you'll be able to find it there. When you tap ninasoap.com, and you have free download, or you can just scroll down to free download, and you should be able to have monthly budget spreadsheet. Monthly budget spreadsheet it is, and we have budget spreadsheet. So, but yeah, let's go back to and then we can look at the different category of your budget to see if there are things you want to improve. When my husband and I are trying to pay off our debts, we work into trimming some expenses, and that's how we trim the phone. But you can see what you are paying for that you do not really need that level of expense, and then lower them so that you have more saving from your paycheck that you can put to work. So, and my husband and I, if you are two house income earner, you can see if you can live on one income and use the other income to invest in the stock market, in rental property, and or to start your own business. So, and in that attempt of living on one income, because that's something I used to ask my husband, can we live on one income? And he will say no. It was some years ago. And one day I asked him why. And then he said, and I asked him, okay, so what are our debts? How much we pay every month for debt? And credit card debt, car loan, student loan. And he totaled them for me. And then I said, okay, and then I said, okay, so I keep asking question, and then he said, with the investment we're doing, we cannot live on one income, because at that point we are investing in the stock market little bit too, and we are trying to pay a little bit more than what we are paying on our debt as well. But then I said, okay, you know what? Let's post investing in the stock market. We kept investing with our employers, and with our employers, like the retirement account with our employers. We kept investing there to reach the maximum that the employer will match. But our own Roth IRA and brokerage account, we didn't invest actively that the way we were doing it before. But then we have allowances, $100 each a month. We just invest those ourselves in the stock market, buying penny stocks, hold on to them for a little bit and then sell them for profit. We make some money, we lost some money doing that. But just by doing that with $100 or so every few months, we improve a little bit, our investing. At least it showed me that I like to invest, and I noticed that my husband liked to trade. So, and he made money trading, and I lost money investing, because we'll buy those penny stocks and I will on the low side, and then I will want that to double, and then I will sell it. But then it'll went all the way up and I won't sell it, and I will keep holding on to it until at some point the company will go bankrupt on me. So I noticed through those type of experiences that I'm more of an investor, buy and just leave it there. And my husband just like to buy it, and when it goes up a little bit, he sells it and then get his profit, realize the profit. So you just have to see what kind of personality you have or you are, and see what works more for you. You make more money by trading, and both are good, but in this video we are talking more about investing in dividend stock. So in a point that you do not need to sell the stock to have income from it. And for that reason, it is a good idea to do that in a brokerage account. And we will come back to that. And so, yeah, you can look at your expenses to see how you want to trim it to save more money. So we pay off our debts. We post investing, we pay off our debts, and that allow us to now invest more. But again, things happens that you'll have big expenses, and then you will decide if you want to save for it or if you want to post investment and do it. For instance, we need to change our roof, and we have siding that we need to replace as well because of hail damage, and my husband preferred we post investing and do those things. We committed for the siding, we will get that done. And we post at the moment, we post to save for that siding, and we are pretty much done so that we can continue investing But then I told my husband that no, we are not going to post investing to save for the roof. The roof is not leaking. We will keep it and we will keep investing. So we have option. We can revise the amount we are investing in dividend stock, and then we can save some in our saving account to grow so that it can grow into the amount we need to replace the roof. Option 1. Option 2 is the amount we want to invest. We can invest some and trade some, and what we are trading, we trade it profitably and use that profit to replace the roof. And he likes that idea, so excuse me. And I think that's a good idea too. So investing in the stock market through dividend for that dividend income, and trading stocks for faster profit as well, and put your principle that you want to use to do something around your house in the stock market, trading it if you know what you are doing, and use the profit to actually do the work around your house. I don't know if it makes sense. So you just don't trade your time for money and use that money to do things around your house, to buy things, but you trade it and use the profit to do things around your house or to buy things. Does that make sense? That is a very good way of putting your money that you work hard for to work. So, but in this video, we are only talking about dividend stocks. So when I figure out my trading strategy, I will share that as well. But right now, I'm sharing my investing strategy. So you can pick one expense, and for that is the expense for the month. You time it by 12 for the year, and then that will, and in this example, you will take that cost a year divided by the yield, the dividend yield that you are expecting from the stock. That's 600. 50 times 12 is 600. Divided by 6% is 10,000. So if you invest 10,000, you will, in a 6% stock, you will make 600 a year in dividend stock. And then you can just take that 10,000 divided by 10 as well to see how much you need to invest a month to reach that goal. Another thing to do as well is in your irregular expenses. Let's pick an expense. You see small home appliances. I think I have home repair section here that has that 3,000. This year we purchased a fridge, a refrigerator, and the refrigerator costs around 2,000. The one we wanted, we narrowed down to 3, and the first 2, the store didn't have them. So we went with the third one, and and it cost about 2,000. And then I said, and that is an example that we can use in this. So you can say to yourself that, okay, so if you purchase a refrigerator that costs you 2,000, the last time we bought a refrigerator was in 2014, and so to 2023, how many years is that? 7-8 years. So and again, we have young kids. So how many times do we open a fridge a day? What happened to the fridge that we needed to replace it? The fridge, the fridge side of the door became loose. It does now close well, and I had to use 50-pound bag of grain to close it. So I didn't want to take chances with the with the food in the fridge, and I say to my husband that we need to buy a fridge. So and we went and purchased the fridge. So if you say that every 10 years you spend $2,000 buying a fridge, then you might ask yourself, you just bought one this year, so how much do you want to invest in the stock market at 6% for the, so that in 10 years if you need to buy another fridge, you just go use the dividend income from the fridge, from the dividend income from investing that principle. You use that dividend that it generated for you to buy the fridge. Does that even make sense what I'm talking about? So you can take that 2,000 divided by, let's do that. So if you need $2,000 in 10 years, so $2,000 in 10 years to buy fridge. So we'll take 2,000 divided by 0.06. That's 33,000 you need to invest to generate 2,000 in dividend income. Okay, so now that means you are going to make 2,000 a year though, but we want that 2,000 in 10 years. So we can take that 2,000 divided by 10. So that's what you need to make a year, divided by 6% of dividend break, and that gives you 3,333. So it's pretty much about that 2,000. So if you can take that 2,000 and put it in a stock, let's see, this came from Whirlpool, I believe. So you can find a strong company that will pay you 6%. And if you invest 3,000 in the company in 10 years, you'll be making $200 every year, and that's 2,000 in 10 years. Does that make sense? So that's one way you can view as well. When you make an important purchase, it could be maybe a sofa for your living room. If it's not something you replace often, then ask yourself, when will be the next time you'll replace them again? And I think those things like bed, mattresses, sofa, 10 years for the dust mite not to double in it or something like that. Every 10 years you need to replace them. Then you say to yourself that, okay, so if I'm going to replace this in 10 years, or maybe the kids will stay in, if I can use it for 10 years and replace it, and then whatever it costs you, you take that amount, you need that in 10 years. So you can take that amount and divide it by 10 to find how much you need to make a month, how much you need to make a year, and divide it by the interest rate the stock is going to pay you. I'm confusing you. So let's say that you bought a sofa for $1,500, and so you take that $1,500, and every 10 years you replace your sofa. So that means to make $1,500 in 10 years, you need to make $150 a year. So you take that 150 divided by 0.06. So that means if you invest $2,500 in a stock that pays 6%, by the end of the year you'll earn $150 in dividend. They pay dividend on a quarterly basis. So you'll earn $2,000, you'll earn $150 a year. So that money stays in that company. You'll make $150 every year. In 10 years, you have that $1,500 there. Does that make sense? But again, you are reinvesting in the company, and the company is a good one. It will keep growing there for you. Alternatively, you can trade stocks as well. You know, you need to buy sofa for 1,500. You can take 3,000 and trade it to make a profit of 1,500 within a year and buy your sofa with it. It's not like you out of the blue you need a sofa. You'll know at least a year ahead of time that you want to replace your sofa and plan ahead of time. So this is, you know, the fridge, the new fridge. And but yeah, and that made me think
You are not
about
skipping
that
nothing.
option, investing in the stock market for those big purchases, so that the next time we
Put
will
your
purchase
computer
them,
away to eat.
we have the money invested in dividend income, and the dividend income will pay for those purchases for us. So that's one way you could do it as well. So you can break down your living expenses into expense category and then go from there, or you can pick one expense to tackle, or you can just use the whole living expense total to see how much you need to invest over time to be able to generate that amount of money in dividend income to provide for your need. And that's why the whole thing is how to generate income outside of your work, your job, to provide for your family without depending on your employer for food, for the basic food you feed your family, and for your shelter, your basic shelter. Okay, so how many dividend stock do you have in your portfolio, or how many dividend stocks do you need in your portfolio? It does not matter the number. You can go with 100 stocks per se, but what matters is you want to make sure you have dividend stock in each sector of the market. And we have the stock market. We have the stock market. It's not the full list. You have the stock market, and you want to, that's why you manually record on your investment spreadsheet the sector, the sub-industry, and the industry, so that you know all the sectors that you have. And when you invest in the stocks, you can look at your stocks to see what sectors you're already investing. You just want to make sure you invest in every sector. If you find companies that met your dividend income rate criteria and they are good stocks, they pass all your filters that we discuss. You want to use the filter to find good dividend stocks. Set your parameters to invest in them, and then look back at your record to see if dividend the company, the dividend income you are making, if those stocks you invest in, they you have all the sectors represented in your portfolio. And then inside each one of those sectors, you have industries as well. But yeah, so by the time you go through all of them, and when you are investing in the stock market every month or so, you can use that as a guideline as well to see what what company, what sector is the least represented, and which one you and see if there are some companies there that are good and they are on your list. Because for instance, when I was investing during the year, I work on it a lot during winter time, like beginning of 2023, end of 2022, the beginning of 2023. And utility was a sector that I could not invest in. I found some stocks that are great, not really great in terms of dividend yield, but but it was good having them as well. So let's go to utilities. They are more on the 4% range, but they are not paying much, but I want some of those utilities because they are, it is a consumable product in some way, and we use utilities, whether it is electricity or gas. So it is just something that whether there is a crisis or not, people are going to use those resources. So it's good to have them in your portfolio, in my opinion. But in winter time, they were close to their 52 weeks high, and I didn't want to buy any share on the higher range side. Therefore, I made a note for myself, to periodically check on them so that I can, see when they reach their low side, their 52 weeks low, around summer or so, I can buy some. So those are, decisions that you have to make over time. And another example would be oil. So there is some oil companies that I was interested in as well, but they're on the high side. Like for the longest time, when I checked them, I just couldn't find them close to the 52 weeks low. They were more close to 52 weeks high, and I just, keep an eye on them, and they are in the energy section. And one will be Exxon. Not that it's paying that much of a dividend, but it is upward and it's around that 3%. But is you see the price that I recorded at the time that I was doing the research on it, which I'm not sure I put the date. And that's why it's good to have the dates, because it can give you an idea what part of the month you saw that price. And you can see that it was close to the 52 weeks high, and that if it sold at some point for $60 and I'm wanting to buy it for a long term, I don't want to invest in it when it's 114. So therefore I didn't buy it, and I don't know how much it's selling right now. But those are examples. And another one will be Chevron, 179 at the time I was doing the research, and upward trend, and has been around 1980, both of them. And it was close to 189 than it is to 115. Therefore, I just said to myself that I'll just keep an eye on them, and the amount that they are on their low side, that's when I'll invest in them. So yeah, you will, so and therefore those are not really represented in my portfolio, because I didn't really see them coming down. And when you are you are buying stocks, you can highlight the one you already purchased so that it can be easy for you when you are scrolling through your stocks to see which one you purchased, which one you have not purchased yet. And if you find some good stocks that you want to invest in, you might want to make note for yourself so that you can come and check those notes later when you are ready to invest some money. So, and then the one that are good for you to invest in, you can, make those another color that is easy for you when you are scrolling to quickly see those colors. Those are few things you can do as well to help you sort through those stocks. Therefore, it's not about how many stocks you wanted to have in your portfolio, but it's more so you have enough to have all the sector represented in your portfolio to feel diversified. Thank you. And another things that can help you as well when you are looking to have a good amount of stock in your portfolio is when you look at the dividend, you should be tracking the dividend income you are making. And the month that you notice that if you make dividend income every month of a quarter, that means you reach that first goal of making passive income every month, even when you are sleeping. You can look at the months of a quarter and see the month you have the least amount of income and see, okay, what are the companies that are paying me those during that quarter, and then check them to see if you still like how their chart look like, and if you do, check to see if they're on their low side or on their high side, like the 52 weeks low and the 52 weeks high. Compare their price to the 52 weeks low or the 52 weeks high and see if that's the right time to invest in them. If it's not, then you don't invest in them. But that's one way as well. And once you have a good representation of the sectors in your portfolio, you can just keep reinvesting in those stocks that you already have in your portfolio every month. You just look to see which one is on the low side and you just invest in them. One way I look to see which stock is on the low side for me to invest in is to go in my Charles Schwab account and just under account, I will click on position and then I will just scroll down to see the companies, to see the gain or the loss. And I can just scroll down and the gain and the loss, and pretty much the gain and the loss, how is calculating it is taking the cost basis, is how much you pay for the stocks. The price is how much it is selling now. The market value is taking the quantity, the share, the number of shares you have times the price to give you the market value. So if you were to sell all the share you have at the price that is selling at the market price, that's how much you'll earn from it. So the cost you pay for it minus how much you sell it for will give you a gain or a loss. So automatically your account will calculate those unrealized, because you didn't actually sell anything. So those are unrealized gain or unrealized losses. So when it's in red, that means how much you pay for it is more than how much is selling right now. The price went down since the last time you bought it. And the cost basis, if you bought it multiple times, the cost will average it up for you. So it will use how much you pay for total divided by the quantity you have to find the average, the quantity you purchase to find the average. That's how the cost will adjust. And it will use that to minus the market value to find the gain or the loss. So when I'm scrolling and then I found the one in red, I will click on them to go check the price they are selling compared to their 52 weeks low or their 52 weeks high, and then I will check on their chart. What is it?
Gabby is, we're supposed to be reading for 1 hour, but Gabby is instead watching cartoons on her computer.
Yeah, tell her to do the schedule. I'm recording. You guys don't make noise there. Thank you. So I will, look at the chart to see if the chart is upward or growth and deep, and if the dividend they are paying is, I still like the chart, and the dividend they are paying is within my criteria for the type of chart it is, then I'll buy more. Or I will say, no, I don't like this chart, therefore I want to invest more of my money in that stocks, if that makes sense. And there are some stocks purchased here to trade. So they will, because they are all in one account, they are all mixed together. I just know on my spreadsheet what are dividend stocks and what are stocks to trade. But even when I'm going to trade it, I like them to be paying me dividend too, though. But yeah, that's just one way to quickly, and sometimes when I'm buying those stocks, I have a long list of good stocks that are on their close to their 52 weeks low that I want to invest in. I'll just go ahead and buy few share, just one share. That way I have it represented in my account. And from that that way, when I'm scrolling through my account, my stock list in the account, the way we just saw it, if they are on the low side, I can just click on them and buy more. I don't have to go back to the master stock list to find the one that I have not invested in yet. So that's one way. Alternatively, you can refilter your master list by having the growth and deep stock all by themselves and turn it into a table and then sort them through by dividend. For instance, to invest in the 6% one first, then the 5% one, then the 4%, and so forth. And those are sorted by sector. And then you can have the upward trend one sorted as well, to to make sure you invest in the good ones that you have on your master sheets. And to turn your master sheet into a table, you just select the whole master sheet. You can just duplicate the sheet, like you can duplicate your master stock list, and then you just talk one, you turn one into a table by clicking on a table and turn it into a table. And it will pop up and ask you if the title is included, and you check yes as well. But yeah, and you can downsize the list down as well like that. But sometimes I find myself using the master list that we have in front of us here. Okay, so we talk about it. Another way that you can determine how many shares of a stock you wanted to buy if you have a lot more money to work with is you can ask yourself how much you will invest when you are buying. If you find a stock that is good, you are ready to buy some share, you can ask yourself how much will you invest that when they are ready to pay dividend, they will pay enough dividend that is worth one share. Does that make sense? So in this example, if a stock is selling for $10 and the quarterly dividend is 25 cents a share, how many of that share, if you want to invest in that company, how many shares should you buy that each time they pay dividend, you can buy a share with it? So the number of shares, this is confusing, but the number of shares will be 40. And so you just take the price divided by what they are paying, and that gives you 40. So if $400, you have $400 and you purchase 40 shares all at once, then the next time they pay dividend, it will be 25 cents times 40, which will be it will be 10. I thought it would be 20. It will be 10. So that will buy you another share. But keep in mind that the price might change by the time they are paying dividend. It could have gone up, it could have gone down. So that's something to keep in mind as well. And maybe buying for the one share, just in case that the price went up, might be the way. But again, over time you'll reach that goal anyway if you keep investing your money. So track your dividend income by month. There is 2 reasons for that. So why should you be tracking your dividend income? If you are investing in dividend income stocks, I will suggest you track your dividend income to see how much income you are making through dividend. Is rewarding, and it gives you more encouragement to continue investing in those dividend stocks. It allows you to know when you need to make estimated tax payment to IRS and to your state as well. Let's talk about the first one. So if you are tracking your dividend stocks, and there are ways to do that. You can do it manually. You will list all the stocks you are investing in when you buy them, and every month you can go through your account history. You can go through your account history and manually record those companies that pay you stocks. So you have your month on your spreadsheet, and manually you record those companies that pay you stocks. That's one way to do it. And here we have a history account, and I don't know if Charles Schwab didn't kick us out of here yet. Under account, you will find history. But yeah, we are out of it. Let's get out of it. But yeah, you have history, just like the way I show it, and you will make sure you are in the right account, and you just scroll down and you just record the dividend amount that they pay you. So let's go. And if we are looking here, qualified dividend reinvest, that is a dividend that got paid, and that is the amount. So for this SCOO, you'll just put that amount on your spreadsheet for the month that they paid. That makes sense. And then it will get reinvest if you check to get that reinvested when you make the purchase of the stock. And that's very easy to do, or you can even do that in your account history as well. There is just yes or no button to check for the dividend to be reinvested for you. And this one say reinvest share. So when they reinvest the dividend, it will be posted as a negative number, and when they pay, it was a positive one. So when they are paying those dividends, they have different type of names for it. So non-dividend, non-qualified dividend, so that's that. But then you can just manually include those positive numbers on your spreadsheet as dividend income. Whether you reinvest them or not, they are dividend income. You just include them on your spreadsheet. A second things you can do as well is download a CSV file. On that history page, account history page, when you go on top, you will have export or print buttons. So you will click on export. When you click on export, it will open a window asking you, giving you some wording. You read it and you click OK, and then it will open a CSV file for you, and you will copy that CSV file to your spreadsheet. You can again manually enter those positive numbers on your investment income by the month tab, or you can set a formula to automatically pull it from your tab where you paste that CSV file. And I have some criteria because those amount that got paid, they got paid under different categories, and sometimes I will notice it that my total does not match, the income that month. Then I'll see which one is missing, and I'll notice that maybe excuse me, maybe it's using a wording that I don't have yet. This one is the last one that I came across. And then you can just excuse me, set some formula to pull data from your data tab to your dividend by the month tab for you. And as you can see, it's pulling from the raw tab, and I'm using some if formula. Sum the raw let me get out of it. But sum a colon on the row tab if on that row tab, like on that data tab, a specific colon match the symbol of the company, and a specific colon on that row tab match the month of the year that revenue got paid, and then a specific colon on that row tab match the classification of that income that I got paid. So 3 criterias, but then because they pay with different type of criterias, I have to make sure I have all the criterias listed, and that's why the formula is long. But that's pretty much what it's doing. The symbol, the month, which I have to include it here, and the criteria underneath which the category that the funding is paid under, so that I do not include the amount that are reinvested, the negative amount, but just a positive amount. And when all those criteria are met, then the amount related to that symbol will be pulled to my income spreadsheet. So when you set it, every month you can just double. Every month you will pull the data from ChartSwap. You'll make sure you set the range to previous month. If you do it every month, to previous month, to have just the previous month listed, and you export it as a CSV and put on your spreadsheet, and you just go from there. So, and by looking, one way you can use that data is by looking. You can see which quarter month you earn the least amount, and see if you want what stocks are paying you that quarter, and if you can invest more on those, if they are good companies that you like, and if you want to invest more in them, and check when they are closed, their 52 weeks low, you invest in them. and by looking at, and that's one way you can use it as well. But now you need to track your dividend income, so that if you need to make estimated tax payment, you are aware and you pay that. So when is an estimated tax payment is required? First, for you to be paying tax on your dividend incomes, that means you are trading stocks in a brokerage, in a taxable brokerage account, not in a Roth IRA. And when we are talking about dividend income, making dividend income because of the goal you set for yourself to make dividend income, to replace your, to be able to earn income from dividend to cover your living expenses, for instance, you want to be doing that in a brokerage account, so that if you need to touch that money, you can touch it. The government doesn't have a say in when you should touch the money, how much you should withdraw, or how much you should invest in the first place. Those rules exist for Roth IRA and IRA. And for Roth IRA and IRA, you do not pay tax. On the Roth IRA, you do not pay tax on the income or profit that you are generating investing in inside a Roth IRA. But you have to meet the government guidelines on how much you need to put in that account a year. The maximum you can put in that account a year, and when you are allowed to touch money from that account, you have to meet those guidelines. For the IRA, you do not pay tax when you invest in an IRA account, but then when you reach retirement, you are taking money out of that account. Everything you are taking out is taxable. But in the Roth IRA, you are investing in it your after-tax money, and when you retire, you take money out of it. Anything you take out of it is tax-free. They are great, but they are not very helpful accounts for the goal we are working on, to have different sources of income to cover our living expenses and not depend on our employer to provide for our family. So if you want to create a source of income through dividend stocks with the goal of that income to provide for your living expenses, it has to be a brokerage account. If in case you need that money, you can touch it without having to go through ways that you will avoid penalty also. The downside of doing those things in a brokerage account is you will pay tax on it. So when you are investing in dividend stocks in your brokerage account, in your taxable brokerage account, those dividend income that it is generating, those dividend income that you are generating in the account, even if you reinvest those dividend income, you still pay income tax on them when you file your 1040 at the end of the year. Excuse me. So you want to track your dividend income to make sure to know when you need to make an estimated tax payment or not. So when is an estimated tax payment required? If you think you will owe more than $1,000 in tax when you file your tax return 1040, then you will need to make estimated tax payment during the year, or you should update your W-4 with your employer to let your employer withhold more taxes on your income. And we can look at an example of W-4. That's employees withholding certificate, and W-4 you can update that anytime with your employer, and more specifically is going to be the step 4 row C. So the boss 4C, you'll put the extra amount that you want your boss to withhold extra from your paycheck every month, and you want that amount to be, you will estimate your tax that you will owe on those dividend income and divide that by the number of paycheck you receive from your employer to find the amount that needs to be withheld from your income, from your paycheck, from each paycheck. So that's one way to avoid making estimated taxes, by increasing your withholding with your employer. Or if you have a side business, an LLC, tax as an S-corp, and that S-corp is paying you, you can withhold more through your S-corp as well. So how to figure out estimated tax for stock investor or part-time trader or on passive incomes? There are two ways to do that. We are going to quickly go through the first one and focus on the second one. So those two ways, one way is to use IRS estimated tax worksheet. And this option takes more time to walk through, but allows you to have a more accurate estimate and therefore having less refund when you file your taxes. And even if you end up owing money, it will be less than that 1,000. Or you might have a little bit refund. That will be, not be too much. And so those tax worksheets, you'll find them in IRS publication 505, which is withholding tax and estimated tax. So let's see, IRS publication, tax withholding and estimated tax 2023, the latest version 1. Let's go to page 30. So you'll use worksheet 25 for qualified dividend and capital gain tax worksheet. So it helps you, you'll put your dividend income that you are estimating of earning, or if you are trading stock times to times, those estimated annual profit, you'll include that on the tax sheets. And as you complete the form, you just read it and answer the data as requested, and it will apply different type of rates, based on short-term and long-term gain. And the data from the form will go on worksheet 2.1, where you will estimate the tax. So when you are done completing worksheet 2.5, you will complete the worksheet 2.4, the standard deduction, because the standard deduction is kind of high now, and most people will do the standard deduction. That's what I'm working the standard deduction. So you'll complete the worksheet 2.4 for the standard deduction as well, and the data from it will go on the worksheet 2.1. And now you'll go to the worksheet 2.1 to estimate the tax. And worksheet 2.1, estimated tax worksheet. It will ask you for your adjusted gross income that you are expecting for 2023 or for the current year. But then it will be helpful to pull your last year tax return to find your AGI on it. And if you are estimating about the same, you can use that. And you'll find your adjusted gross income or AGI on your 1040. On your 1040, you just scroll looking for adjusted gross income line, and you can go from there as well if you're expecting about the same, assuming your salary on line 1 is going to be about the same, or your income portion is going to remain the same. and you go from there. And once you you'll just complete the form, and we are going to talk about the tax rate schedule later too for the second option, but you just complete the form and you'll be able to determine the estimated tax payment. Okay, so this is option 1, and we are going to talk about option 2. Jaden, you are making a lot of noise there. I'm recording a video and you are making a lot of noise. So you are now going to be making that noise. Yeah. When I come there, we are going to talk about that. You are going to stop yelling. And Angelique,
What?
you do not.
Hit him? I didn't.
You do not. Did you hear me?
I did not.
Okay, so both of you go up. Why?
Let me tell you my side of the story.
Now I'm recording. When I come there, we are going to deal with that. Did you hear me?
Mm-hmm.
Okay.
I even got proof.
So, Jaden, you are going to stop yelling there because you are making noise and I can hear it from here. Did you hear me? Both of you go up. And Angelique, ignore him and work on your schedule. Go up. Yeah.
Too bad you don't have proof.
So, how to determine the estimated tax using your annual estimated household income and income tax rate. So first, how to locate the federal income tax rate. You can find the federal income tax rate on either publication 505 Form 1040 ES and 1040 ES, 1040 ES, the latest version 1, has it as well. Okay, so now that we know what the rate is, you wanted to know which rate is your federal income tax rate. So the way you are going to figure out is estimating your household income. Your household income. So let's see here. You can insert that on your investment spreadsheet. You can just take your gross income, your not even your take home, but your annual gross income before tax. If you want to go that route, you can just take that for you and your spouse and put it and write it down, and then look at your dividend income you are making through dividend. Look at income you are making through dividend and see at that rate what the annual income will be and have an estimation to work with. And then if you trade stocks, you need to find income you made selling those stocks. So you can just you should have a way of recording those stocks that you are trading. Let's see here. And you just have a way of recording those. And it's just an example. In fact, let's go back to the investment spreadsheet. Let's just pick one here that we like to trade. And again, it is a spreadsheet to record. Each time you purchase a stock, you can just make an entry, a daily entry. When you purchase, say how much you purchase, what stock it is, the price you set, and then you just go to your account history to record when it purchased for you and the price it purchased it for you. And if it happened that you actually sold it, you can go back and on that same line, you can add how much you sold it for, and if any profit, you add the profit as well. So compiling those profits, you want to make sure you include them in your estimated tax tab for how much you think for the year you'll make in profit trading stocks. That and your gross payroll will give you, by payroll, you and your spouse, so that will give you your household gross income. And you can take that income and go to the tax rate schedule, and you are going to look for the filing status that you use on your tax return. And you can find out when you pull your previous year tax return, if your marine status didn't change, the filing status that you use, you'll find it there, and you look for it on the tax schedule. And for marine filed jointly, it's going to be schedule Y1. So you want to compare your household gross income to the tax bracket within the marine filed jointly section. So you want your income to be at least the amount starting the bracket or more, but less than the amount ending the bracket. So 113 or 114 is within 89,450 and 190,750. Therefore, you found the bracket. Now, when you find the bracket, you look for the tax rate associated with that bracket, and that's the column the tax is, and that is the rate. So you take that rate and you put it on your spreadsheet. Now you know that your paycheck is getting taxed by your employer. Your employer is withholding taxes on your paychecks. Therefore, you do not worry about that. And even better, when you open your previous year tax return, you'll see if you got a refund. If you got a refund, you'll find it on the refund section, and you can take note of that as well. So if you know you got a refund, you know that your employer is withholding enough from your income. So it's now the reason why you want to make estimated payment. The reason why you want to make estimated payment is because you are making income outside of your job, and those income are passive income that no one is withholding taxes on for you on your behalf. So you take those passive income, in this example is 13,196, and you apply that 22% on it. So when you do that, it will give you the annual estimated tax, which is $2,900. So now you can look at the tax refund you received the previous year. If everything else will remain the same, you will look at the tax refund. If the tax refund is more than that $2,900 in this example, then you don't have to worry about making estimated tax. That means that your employer is withholding enough from your paycheck that is covering that estimated tax, and you don't need to make an estimated tax. But if that tax return, if the refund is lower than, let's say the refund is maybe $1,000, that means you owe $1,900. If you do not make estimated tax payment when you file taxes, you could easily owe $1,900. So when you owe more than $1,000, you pay a penalty on it. Therefore, you need to take this $2,900 and divide it by 4 to find the quarterly estimated tax that you need to pay, or you can just pay the full amount as well upright. But you need to remember to go to your state government side, tax side as well, to look for estimated tax information and do the same thing. And in this example, we could easily now make estimated tax payment to IRS and be fined because of we usually get a good amount of refund when we file our tax return, because my husband and I, at least I know for sure for my case, since I changed my W-4 quite a bit, I tend to let my employer withhold tax at the highest tax bracket, like a single, without claiming any deduction, because I tend to have other sources of income outside of my job. That way, if that way I know that I have the tax side covered. So if I don't want the refund that I receive when I file my taxes to change because of this tax that is estimated here on those passive income, then I will need to make this estimated tax payment to IRS. As for the state, we usually owe about $300 to $500 the state when we file taxes, and then we will pay. Therefore, knowing that this passive income could easily generate about $1,200 to $1,300 income, if we state tax, if we do not pay it before the end of the year, we could estimate about $15 to $1,700 state tax owe, and because it's more than $1,000, we will pay penalty on it as well. Therefore, we may not need to make estimated tax payment to IRS, but we need to make estimated tax payment to the state. But yeah, those are the reasons why you should track your dividend income, so that when you know that you might owe tax more than $1,000, you make estimated tax during the year. So if you decided to make estimated tax payments, there are deadlines that you have to meet, and we have a video on those deadlines, and we have a video on estimated tax in detail that will be helpful. So I could add it in the description. But just know that your first payment should be by April 15, the second one by June 15, the third one by September 15, and the last one by January 15 of the following year. or you can make all those payments at once by January 15, like the first payment, no, by April 15, the first payment. If you want to pay all at once, you can do that when your first payment is due by the first payment due date, which is April 15. And the exact date change a little bit based on whether there is a holiday or weekend. Okay. You can pay by online, and there are different options, and you can find those. You can read more on it on Form 1040 ES as well. They have online options for you to pay online, or you can just mail a check or a money order. I would prefer a check because you have more space to write on the check and follow the instruction on things that you need to put on the check. And you print the voucher, and the voucher is at the end of the Form 1040 ES. And you use the right voucher depending on what quarter you are paying for. So if you are paying everything all at once, you are going to pay by April 15, you use the voucher 1 and you make the full payment for the year. But if you are going to make quarterly payment, then the first quarter payment, you use the voucher 1, and then the second voucher for the second payment, the third payment, and then the last payment. And you put both the check that you completed properly and the voucher that you completed properly in an envelope. Don't staple them. You put them in an envelope, and you come to 1040 ES instructions to look for where to mail your estimated tax payment. So you might want to first locate the state you are living in and see which address corresponds to that state. And that is the address you put on the envelope, and you mail your payment. If you do not want to mail it, then you can just look at the online options to see which online option works more for you. Thank you. So that's the reason why you should invest in dividend. You should record your dividend stock. You should record your dividend income. Okay, so what are stock dividends? So stock dividends are those earnings you can make from stocks. In case you are wondering, not all stocks pay dividend, and some do. So those are earnings that you can make on a quarterly basis from some stocks. So when you buy some share of a stock on a quarterly basis, and some can be semi-annual, but on a quarterly basis, they will pay you a dollar amount per share. And you can see that on there. When you look for more information on the stocks, you'll see how much they are going to pay per share, and based on the number of shares that you have with them will determine the total they will pay you. And when they pay on a quarterly basis, you'll earn that 4 times, and that will be the annual dividend amount you'll earn from them. So yeah, that's what stock dividends are. They are income you earn by buying some stock that pay dividend by buying dividend stocks, share and hold on to it past those dividend payment time. And if we are looking at an example here, qualifying dividend qualified dividend is a dividend, a stock dividend. We have another one here for $2.41. Excuse me. Qualified dividend from Hasbro, $21.47. Those are income paid by the dividend to the owner of the share. I don't know if I say it right. Those are income paid by the stock companies to the owner of the share. They are dividend, stock dividend. And we can see them a little bit here as well. And every quarter, those companies that pay dividend will pay you based on their number of shares that you have with them. And you can track them by month as well to see how much you are making in dividend income from each one of them and which month they pay you. So how do I know if a stock pays dividend? So, like we did it before, when we visited the company, when you search a company, you can use Google as well, but if you have a Charles Schwab account, you must just do that inside the Charles Schwab account. So when you find the company, you click on, you search the company symbol, you'll access the company's information. So when you click on it, that page that will show you the detail related to the stock price, you just scroll. If you are working on Charles Schwab account, you just scroll down to the dividend section to see if they are paying dividend. That's how I do it. So when I search, I will search a stock by the symbol, and then when I access the page, I'll just scroll down looking for dividend information, looking for the dividend rate. And if it does not pay anything, then you won't have any information related to dividend. But when they do, you will see the dividend yield, you will see the amount they last paid, and you see the month they last paid or they are going to pay. That's how you know stocks that pay dividend. And the purpose of this video is to find those stocks that pay high dividend yield that you can invest in long term for dividend income source. How much should I invest to make $300 a month in dividend? So if you want to make $300 in dividend, just like the way we like you take that 300, you first time it by 12, and that will give you the amount you'll make a year. And you take that 300 times 12, that will give you 3,600. And you'll see what dividend yield you are comfortable that you like, that you are comfortable accepting from those companies, and let's use 6% because that's a good rate. So divided by 0.06, that give you $60,000. So you need to invest $60,000 at 6% to make $300 a month. And if that 600 is a large number, well, you can divide it by 10 and set that goal as 10-year goal, and that's 6,000 a year, and you can divide it by 12, and that will give you 500. So if you save 500 a month, every month, and you invest it in a dividend stocks that pay you 6%, by year 10, you will have invested about $60,000 and will be making $300 a month at least, if not more, because those dividends you are making will be reinvested. So if you are saving 500 a month times 12, that gives you 6,000 a year. If you take that times 6%, that's 360 that you'll have made a year in dividend income. So that means by year 10, you'll be making about 300 to 360 a month. So let's do that again. 6,000 divided by 12, 500. So if every month you invest 500, at the end of the year you'll have invested 6,000. So if that 6,000 was put in a dividend income that pays 6%, then you'll have made 360 a year on it. It's better than putting that money in a saving account. So you'll have made 360 on it. So if you keep doing that same thing, say investing 500 a month for 10 years, you'll be easily making 360 a month after year 10, and you'll be making more than that. Thank you so much for your time. I'm Afiavi Liberman, creators of Liberman Consulting L.L.C, YouTube channel, and ninasop.com, our blog. And on our blog, you can find our free download session, where you can find a monthly budget spreadsheet to manage your finances. On our YouTube, we share different ways you can save money and different ways you can make money to reach your financial independence, where you do not depend on your employer to provide for your need. And investing in dividend income is one way to make money to be able to reach that goal. And that's one goal of ours. And I like to share what we all are learning from it with you. Thank you. We thank you very much. You all that watching our video, we thank you very much for all your comments, and we thank you very much, you all that subscribe to our channel. Thank you.